Yes, Naganath, President and Chief Investment Officer with DSP BlackRock Mutual Fund, joins us on the show. Naganath, good morning and thank you for joining us. Naganath, how do you see markets over the next 6 months, given that the central bank and election outcomes are important events which surely will influence the script of 2014?
Broadly speaking, we think that the first half of this year, 2014, you will see market volatility on the higher side, and then in the second half of the year after the elections we expect the markets to start trending up again as economic growth picks up, as corporate earnings growth begins to improve, and that trend we expect will sustain in 2015 and possibly 2016.
Naganath, hi, morning. Do you think money will flow out from commodities, risky assets, and move in the bond markets once QE tapering is in place? And what will this mean for emerging equities, especially India?
Well, the taper has started, so the pace of the taper is something that we have to focus on, and I think there'll be some clarity on that possibly later this month into February. So yes, I mean, it will have a bit of a dampening effect on equities globally, including on emerging market equities, and that's one reason why I believe that in the first half of 2014, equity market sentiment, for equities could be somewhat subdued and could also potentially, lead to either a range-bound market or a slight correction.
What are your expectations from Q3 numbers? Because the initial numbers surely have been better than what analysts were factoring in.
Maybe, but I think the more sustained upturn in equities, in my opinion, will happen post-elections, and that trend, like I said earlier, will likely sustain all the way into 2015-16 as economic growth bottoms out and then starts moving up, and is followed by robust growth in corporate earnings, which will then underpin strong performance by equities.
But FMCG and metal names have also seen some selling in the past few sessions, Naganath. Do you think one can look at these sectors at lower levels now?
No real view on that. I mean, these things ebb and flow, so, I'm sure they will, they may have to deal with some market correction in prices near term, but, if you take a medium to long term view, I think not just the FMCG sector, but even cyclicals, I think, ought to do well as economic growth momentum picks up later this year into next year.
Naganath, how do you see the banking space moving? Because the opinion about banks is split right in the middle. Surely we've got some macro support because both WPI and CPI has cooled down. But as of now, markets are still worried about credit growth and the NPA cycle.
Well, for the banking sector, I mean, the issues around NPAs, I think, are more or less discounted in the stock prices. And if I'm correct about economic growth picking up later this year and sustaining, then I think these issues will be less of a concern towards the end of this year into 2015 for the banking sector.
So what kind of stories are you looking at in the mid-cap space? In the past 2 to 3 months, we've seen many stocks which have delivered a good 50 to 100% return. Do you think this will revive the retail sentiment as well?
I think the mid-cap sector performance has to be approached company by company. One cannot take a generic view that, the entire sector will do well just because it's done well in the last 3-4 months. Here, I think investors ought to look at a company's specific fundamentals and then decide whether they want to invest in that particular mid-cap or small cap or not.